Hello dear traders, welcome ladies and gentlemen. This is episode 15 of our MCA Trading Made Simple series. We're talking about semi-smart positions today, one of the latest indicators which was added around half a year ago. As you can see, I decided to actually extend this series, and I will add some more additional videos compared to what I had planned. This is the videos we already have published. This is kind of turning into a proper complete course. That's good. Okay, so this is a very exciting indicator because, as you know, so far the focus was on what the dumb money does, and here we do not really see the smart money algos directly, but we see the semi-smart traders in the market, the ones which are often within the dumb money tolerance and which are able to profit. And this is a very, very powerful tool. We're going to look at the concept, and we're going to look at real life examples as usual. Since in this series I try to keep things super simple, basically you need to pay attention to the upper bars. Okay, green bars show semi-smart buyers, okay, so longies, and the red bars show semi-smart shorties, okay, so sellers. Okay, but this indicator gives you much more information because it shows you to which degree those traders are in profit. The more they're in profit, the higher the bar will grow. And at the same time, you also see all the dumb money traders who are in loss countering those semi-smart traders. Okay, so the traders below this middle line, they are in loss, and you see often this pattern. Whenever you have a few longies on the semi-smart side being in profit, you have many dumb money shorties who are in loss, and you get more and more into loss as a result of the up move against them. Okay, the same the other way around. Like for the few semi-smart shorties we see, we have many dumb money longies who are getting more and more into loss, into drawdown, the more the market is falling against them. So this indicator also shows you this dynamic, and it's very, very powerful. So let's look at several screenshots. I've also added some screenshots from the video I've made about this indicator, which you find on this channel, when I introduced the MK Web version 17 back then. It's from roughly 5 months ago. Let's look at the 2 screenshots from that video. So these are the patterns, which you can see. So this is a real life example. You see, the smart money longies are in profit, the dumb money shorties are in loss. The market goes up, and the longies, the smart money longies, the semi-smart money longies get more and more into profit, whereas the dumb money sellers all continue to lose. What happens then? We have the semi-smart traders going short after they took profit up here, and the market goes down, and the dumb money longies all get into loss. Okay, this summarizes it pretty nicely. I also had this real life example. Okay, so here you see that on the MK web. Okay, so the semi-smart indicators, they are below the 2 squeeze indicators. Okay, so the lower one is, as always, current plus historic, so you can see also which traders took profit. For example, you see here those semi-smart longies, they were into profit and they took the profit and left the market. Okay, and the upper one shows you the current positions, like you see here, with loads of semi-smart longies, and the price went up. Okay, this is incredible. It shows you why those pullbacks happen, which before were sometimes surprising. It's when the semi-smart traders, they go long or short. Okay, Nice. So let's look at real life examples in more detail. And as always, you find really more detail also on the MCA video course. But for now, let's look at this. Okay, so this is a great example here. Okay. So these are the two semi-smart money indicators. This one is the historical plus current. This one is the current. And what do you see? Okay. The semi-smart money is short. The price goes down. And what happens to the dumb money? Look at all these longies here. The longies get more and more into loss. By the way, you see that also here, yeah, with the net loss indicator, they get pushed back into loss with the falling market. Okay, so another confirmation from a separate data source how these dynamics work. This is tradable, ladies and gents. Okay, especially here, look, we had a bit of a squeeze going on. And then if you have semi-smart money coming in short on top of the squeeze, of course the market will fall, yeah. This is even more dominant than MTS. The MTS can be taken later, but you know, first the market is gonna fall. This is very, very powerful. Okay, let's look at another example. Okay, the same here. Yeah, we have the semi-smart money going short. Market falls. Okay, they left the market, the semi-smart money shorties, they took profit, as you see. What happens then? Later the same again. Okay, we have the semi-smarties going short, the market falls, the money longies all in loss. All these longies are in loss, the money longies. What happens then? Again, the semi-smart money goes short, the upper MTS is taken, boom, big down move. Amazing, isn't it? Yeah, this is quite something. It took a long time, this particular indicator. Now let's look also at the example where the semi-smart money is long. Look here in dollar yen. I took the screenshot today. Look at that. Semi-smart money is long. Okay, boom, market goes up. Okay, then we had shorties coming in, semi-smart shorties, market went down, shorties took profit, they're no longer in the market. Okay, what happens then? Semi-smart longies are entering, market goes up, takes the MTS again, semi-smart longies entering, going up more, shorties are in loss. Okay, what happens then? Pullback again. Look, when there are a lot of semi-smart longies are coming in sequence, that's often powerful. Then there's going to be an extended move or a gap even. Okay, the market will never gap against the semi-smart money, by the way. Okay, guess what? The money short is coming in, boom, extended move. Okay, do you see that now? And all this happened without the squeeze going on. Okay, there was no squeeze. Those squeeze lines were neutral and those ones dominated. Okay, and of course, look, they took this lower MTS, the upper MTS and all of that, but okay, pay attention to this one, it's very powerful. Like the position bar indicator, it has a scale on the right, so pay attention to that. Okay, so this is an amazing indicator, and now look, we have all the dumb money, the overall dumb money, the net loss, the squeeze, and then also the semi-smart traders, okay, within the dumb money tolerance. Okay, combining that with all the other things, the SDS, the position bars, the MTS, the LTS, the order gap zones, the option strike targets, you can see already how powerful this is. Yeah, simple as that. Okay, I tried to keep this one short. This was the last video regarding the short-term tools, and now we're gonna look at all the other topics which were on the list. I hope you like it. If you saw this video here first, please go back and watch all the other videos one by one. Okay, you need to watch them in chronological order, because then you will gonna have like a nice aha effect in the end, and you know, things will fall into place in your brain, and you will actually understand that it all makes complete sense, that the way these algos operate makes complete sense once you understood the principles and why they need to do what they are doing. because that's the only way to make all the dumb money traders lose. So don't be a part of the dumb money. Get the MK web, get the MK video course, study this stuff here, beat the algos, beat the AI, okay, use your human edge. Don't waste years and money trying to find some edge which you can't easily develop. Don't waste money on price-based indicators, don't waste money on courses about naked price patterns and all that stuff. This here is what's going on. Lots of love.